Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello traders, checking in on the market. So for me, today will henceforth be known as the day the laggards took over. And I'm going to do a video specifically for those sectors that we've been watching, but it's hotels, cruise lines, marijuana sector, casino, gaming, and they were on fire today. Market overall, up well. And what is very important for me is my screen right now, I'm looking at red. Amazon, Google, Netflix, Facebook, and Apple closed up 0.07, but it was red into the close. All those major tech names are red. So everybody points to the tech names and says, myself included, the S&P 500 is weighted where those names are the most important names in the market, and they are the reason for this bounce we've been seeing. Well, the fact that we just hit a higher high on SPY, the highest price of this bounce, and the fact that we were red on all those tech sector names is a good sign for bulls. That shows me sector rotation where we're seeing profit taking before those names have major earnings this week. This week is the main event for earnings season as far as who's going to be reporting. And we're seeing profit taking in those names heading into earnings. And with that profit taking, we're seeing the money go into our laggards. So away from our leaders, the tech sector, into the laggard sectors I just mentioned. And the financial sector was up 3.4% today as well. Certainly one of the weaker sectors, but seeing an influx of money today as money leaves tech. So from here, Tuesday, Wednesday, Thursday, it's going to be all about how do we respond to earnings from Google, Facebook, Amazon, Apple, so on and so forth. But S&P 500, new higher high, 287.30 broke. We did get a little sell-off in the last 10 minutes of the trading day. And as far as next resistance level, I'm going to use SPX because it is not adjusted for a dividend like SPY. And the next key level is going to be a little gap fill at 29.01. And as far as I'm concerned, as long as we hold a higher low compared to that level from last week, 272, as long as 272 holds, the bulls are keeping their control of the daily time frame. IWM, bull break, tightening daily range, double top, broke that double top Friday, convincing today. We're at the high of the entire bounce. Throw it in with the laggard sectors that is performing today. Next level is 132.27. Although there's a gap to fill. That already filled. So 132.27 next resistance level. Nice to see the sector catching up. So QQQ. Unable to break the high with any follow through. We did break the high, but we only did so by 12 cents. So a little bit of a double top. That double top would only have meaning to me if we broke 203.63, this support here. Then we would say, okay, that is a very clear top being set. But if we reject and pull back and form a higher low, we'll look to maintain the daily uptrend. Bulls would love to see an initial bullish earnings reaction from names reporting tomorrow to see QQQ break that level a bit more convincingly to avoid that double top. Financial sector held support. Our line in the sand was 21.06. Bull break over 22.52. Now we're looking back at the high of the bounce, 23.66. as the most important resistance level. Healthcare, higher high, bulls in complete control. Anything above 96.62, a 5% pullback. Anything over that is a daily higher low. And the next resistance after 102.01, there's a gap to fill at 102.61. Here we are back to pre-COVID levels with 104.84, the next most important resistance. Biotech sector has already broken its pre-COVID levels. 98.76, 98.79 was a double top, and we broke those today, but closed under them. So still keeping an eye on them. Tons of space for a daily higher low, anything above 83.78, and a very strong sector over the last 2 weeks. No sign of losing the daily uptrend. SMH, 133.95 broke. Again, not a ton of follow through. Bulls would prefer more convincing follow through tomorrow, but up at the high of the bounce, short-term support 128.32. The more the price action does what we're seeing over the last week, and the more I see people being bearish, the more I'm bullish in the short term. Wait for the bears to prove it to us. Show us some bear volume. Show us some losses of support. Then we can go bearish. We don't need to nail the top of the bounce. If we're going to pull back like everybody's saying and potentially test the lows of the dump, which I don't think is happening anytime soon, but if it does happen, what does it matter if we go bearish at 287, if that were the exact top, or 270? Yes, having more gains is nice, but it's all about risk to reward, and we will have less risk if we give up some of that reward to be patient, trying to play counter where the short-term momentum is. The VIX confirmed its weekly bear flag last week and is just following through with it. And the bears are in complete control. Next time we bounce on the daily time frame, we're going to look for a lower high compared to 47.80. TLT has lost the daily uptrend. So now we zoom back out to the weekly, and our weekly higher low of 163.48 is the most important level. If that level holds, the weekly uptrend remains. If that level is lost, bulls are going to lose a lot of momentum. And from that point, I would just zoom out to the 2-week time frame. No, I wouldn't. Doesn't look good. So all about 163.48. The dollar is following through with this equilibrium that we've been watching for what feels like months. In reality, it's probably just a month. Low, high, higher, low, lower, high, higher, low, double top. 98.82 is the most important support. It's entirely possible we trade within this tightening range all week, and we have to wait until next week for a break. Gold formed a daily lower high. High, low of 1661, lower high of 1739, and now we're pulling back. Could this be a cup and handle pattern? It's possible. This is the 12-hour. If it were going to be a cup and handle pattern, that needs to be the low, and the bulls need to show up into tomorrow for the next 2 days at least and break 1748. So it would be the inability to break resistance, healthy consolidation, and again, we're just teetering on pulling back a bit too much. But if the bulls show up tomorrow, right back into the 1740s, then it would be possible. If not, daily equilibrium in tightening range. My stop on my long GLD position is under 1661, lower high is set, and we're looking for a higher low. Silver, we're looking for a lower high to be set compared to 1584. Again, a lot of work for the bulls. For silver to break to that high, we need 4%. And for gold to break to its high, we need less than 2%. Miners holding on well, just trading sideways. We did break the low of yesterday, but only by 3 pennies. It's pretty much 2 daily inside bars in a row. Not exactly, but very close. And bulls are loving that because gold is pulling back and the miners are trading sideways. And that's because the S&P 500 strength today helped hold the bull miners up because gold wasn't doing a whole bunch on its own. So tightening range on GDX, if we get more convincing bear follow through, still easily in a daily uptrend. And if we get a bull break, it'll be a little daily bull flag. Oil. So looking at the June oil futures contracts, our daily lower high is set, inside bar, bear break. Now the question is, can the bulls hold 650? I would assume they can. I would assume we're going to likely form a higher low compared to 650 and tighten up between 650 and 1826 resistance, the top of the bounce. Keep in mind, USO keeps changing how it is calculated. One thing that has not changed, the hourly downtrend is so clear. Look at these lower highs. 340, 308, 294, 287, 273. Just a lower high every single hourly bounce. So we just had the June futures contract bounce over 100%, and USO has not been able to change the hourly downtrend. The bears have complete control, and we're still in a slow fade with weak closes 4 days in a row. Caution trading oil. Natural gas trying to set a daily higher low compared to 1536. Need a 4-hour trend change though. If I want to make an entry for that daily higher low, I'm looking for an entry on a 4-hour higher low, and my stop will go under 1643. I don't trade natural gas, so I'm not going to do that. But if I were, that is what I would be looking for. And that's a play that I do on every time frame. When I'm looking for a 15-minute higher low, and if this is the 2-minute time frame, I would say that's a big bounce. I'm going to anticipate a 2-minute higher low, put my stop under the low in case I'm wrong, and look for the 2-minute trend change to give us the 15-minute higher low. Same thing, just a different time frame. We need the 4-hour trend change to give us a daily higher low. And that's it. Check out the laggards video if you're interested in those sectors. Hope you had a good day. Bulls still keeping their control. Some of the sectors definitely a little bit double toppy, but unless the bears follow through and unless we see bearish reaction to the first handful of big tech earnings this week, it's not going to mean much to me. Bears need volume and breaks of support to prove anything in the short term. The burden of proof is squarely on their shoulders. I guess they've got haunches, a bear haunch. Is that right? It's on their haunches.